Real estate is about freedom, choice freedom, time freedom, and money freedom, and the impact you can make with that freedom. But it doesn't come without cost. Your freedom takes work. That's why Neil Timmons brings together the tools you need to build your real estate legacy, from tips and tricks to interviews with industry titans. It's all here in one place. Real Grit. Let's get to it.
What if I told you you can make 20 times the return of a single family fix and flip on your next big deal? Well, it's actually possible. It's possible inside the world of commercial real estate. Say, I'm inviting you to this free challenge. It starts August 15th. It's totally free. It's a 5-day challenge where I'm going to take you and deep dive into the world of commercial real estate, more specifically, capital multiplier properties, what that is, how we identify them. I'm going to show you how to identify them, how to evaluate them, and how to lock them up risk-free. I'm going to give you all the paperwork to do it. It's totally free. You can sign up to join us at www.20xprofitchallenge.com/real grit. That's www.20xprofitchallenge.com/real grit. And I'll see you in the challenge. Hey, everybody, welcome to Real Grit. I say I've got Chris Larson here with me. He's been investing for over 2 decades. There almost isn't anything he hasn't done. He's flipped short-term rentals, got into development. They're doing big syndication deals across multiple asset classes. So we're going to dive into that. He hails from Asheville, North Carolina, a terrific husband, and he is a husband to a wonderful wife, that is. Want to make sure I get that clear.
That's more accurate.
Yes, thank you. And he's got two really good boys. So I'm excited to have him here. Chris, how are you?
Oh, Neil, I'm fired up, man.
Good. I'm excited to have him here. Hey, we all started someplace. What was your first entry point into real estate investing?
Yeah. So, man, I was renting. So I was in college and I had a friend of mine that moved out of this townhouse, and I moved into that townhouse as a roommate with 2 other people. And I had gotten into investing in the stock market. And then I got into day trading, which I wouldn't really call investing. But long story short, my lease lapses and I was having issues with my landlord. There was problems and there was stuff that wasn't fixed. And I was going into the next school year and I saw this townhouse for sale up the road, and I'd started to learn about other different types of investing. And after laying in bed at 3 a.m. and thinking like, is this really how I want to live my life 20 years from now? No, we're kind of like here 20 years from then. I thought, you know what? Real estate seems so much more like me, that would fit my personality than day trading in the stock market. So I ended up buying that townhouse with the co-signing of my mother, and it was $3,000 down. Got a nice little FHA loan back then for a $90,000 townhouse. And now we call it house hacking, where I rented those 2 bedrooms out. And that was my first property. And I bought the one right next door, and that's now we're 3,000 some units in. So
yeah, incredible. From there, one house to 3,000, there's been a whole lot of ups and downs along the way, I can imagine. What were the iterations? So you go in and you house hack, and then I guess how did it evolve?
Yeah. So, I had big visions back then, and I said, all right, I'm going to start with residential. I'm going to get commercial properties. And I kind of went through this whole process, and along the way I was, 5 or so properties in, and I had started a career because if you're a college student, and even if you're making money, you run out of capital, right? So I was running out of capital. I was like, all right, I need to find a career that I can make a lot of money. And I'd read Rich Dad Poor Dad in my early 20s. And I thought, okay, I want to be an accredited investor, which means I wanted to make a couple $100,000 or more. So I said, all right, I want to find a career that I can make $250,000. And I looked at all these different sales careers. I ended up settling on medical device sales, spent 18 years in the industry. But when I got into it, I got excited, I got involved, and I put my head down because I wanted to make real money. And it takes a while to get to that level. You don't just start out and be like, poof, you're making a ton of money. It's like anything, you got to work at it for a while. And Malcolm Gladwell says, hey, 10,000 hours? It's about 5 years. Yeah. It's about 5 years of working your tail off. And that's about what it took me. So, I'm 30 now. I'm making good money. I'm accredited, right? And what does that get me? That gets me a lot of hours on call, a lot of hours working, and a lot of time not spending looking at my real estate investments. Right. So I kind of popped my head up and I thought, all right, man, what am I doing? And I realized, all right, I needed to do something different because these great returns that I was getting on my little residential portfolio had shrunk down to about 7% and then about maybe 4% after tax. And that's when I started investigating and discovered multifamily real estate or apartments as an LP, as a passive investor.
And that was your first entry point then into the apartment side of the equation?
Yeah.
As
So
an
that was
LP?
about, yep. So that was about 10 years ago. And simultaneously to that, we had our second child, and my wife decided to go back to work. So, well, what do you do when your wife, by the way, she's an architect, she has her own practice. So now she does, but she was working for somebody else, but she was a contractor. Yep. So she didn't have any benefits. She didn't get paid time off, and she didn't make a ton of money. So at the end of that first year of her going back to work, I did the math and I found out that it cost us $11,000 for her to work. And I told her that. I said, hey, cost. And she goes, I only made $11,000 after like taxes and daycare. I said, you're not reading the math right. It says negative before that 11,000. Right. And she's like, we lost $11,000 after tax and daycare after what I made work. I said, yeah. I said, we got to do something different. So we started building spec homes, which she led the design and management of those. Yep. And then along with my, when I'd get a bonus, we'd take the profits from those spec homes and we would put that into the apartments. So we kind of started this flywheel working, Neil, where we started, investing or being in multiple different asset classes. But ultimately we sold all the residential properties and we plowed everything over the next 2 years into commercial real estate.
Into commercial real estate, as from an LP standpoint or from a general partner standpoint?
Good question. So the first few years were as an LP.
Yep.
Also bought an office building along the way, which we still own. And then in 2016, we started my partnership with my original partner. In 2015 and 2016, we officially syndicated our first deal, and I was GP in that first deal. Yeah.
Talk to me about syndication. You have come through at that point and had done on multiple residential pieces. You've invested as a limited partner in syndications, and now it was time to do it yourself. Yeah. What was the difference there? What felt easier than what you thought it was going to be? What felt harder than what you thought it was going to be?
Yeah. And I should have mentioned this, but I outline all this in my book, which if you're listening today, feel free to pick up a copy, nextlevelincome.com. You can click on the book link. If you put your address in, I'll even send you a copy. If you put a fake address in, you won't get it. That's how the US Postal Service still works, but you'll get it. So, or you don't have to, you just put in your email and you can get a digital copy. So perfect. Yeah. So, a limited partner we'll start with that. It's just what it sounds like. If you're a limited partner in a syndication, what that means is that you're limited in your exposure. You're limited to typically the amount you've invested as far as your risk. You're also limited in the ability to make choices, which it's nice if you're, if let's say you're a surgeon. I work with a lot of surgeons in my career. Sure. You're working a lot. You're like, Chris, I don't care what the carpet looks like. Look, I don't care what the carpet looks like. I don't care what the paint looks like. If the tenants like it, my wife might care more than I do, but and that's good. It also means I'm limited in my time that I have to invest. So I basically just get a check or deposit in my bank account every month after I make that investment. So that's good. You're also limited with your returns to a degree, because if you're a limited partner, you have a partner that is also taking a portion of those profits. But it's typically wonderful. I was actually getting better returns as a limited partner than I was operating my own single family properties. So it worked out great for me. As a general partner, so as a syndication is simply, it's general partners that find the deal, that operate the deal, that partner with limited partners that are typically investors that come in and provide, some or all of the capital. We invest in our own deals. So it's some of the capital in our deals as limited partners. And then we're a team. So the general partners, their role in the team is to find the deal, is to operate the deal, decide on the strategy of when to sell the deal, like what deal to buy, how to operate it, when to sell it. The limited partner's job is to typically provide capital, to receive the, hopefully, if the property's going well or the project's going well, to receive the profits from that. And then ultimately the capital back when they sell that. And that's kind of how that works.
Yep. And so on a whole bunch of multifamilies now over the years, but you've stacked on some other asset classes.
Yeah. So look, when I wrote my book, if you read through it, it talks about, the wonderful demographic trends that have persisted in this country, that have been here for the past decade. That I just read an article. I just put it out on social media, and I actually did a podcast on it. So if you check out my podcast at my website, you can check that out. But we need several million apartments between now and 2035, right? We need to build about 250,000, I think it was 266,000, if I recall correctly, every year between now and 2035, just to keep up with demand. Yeah. Well, we've had some rough years like COVID in 2020 for multifamily. 2021 was the best year in history on any measure for multifamily. Right. So what's happened is capital has flowed into the multifamily space as interest rates have gone up. Returns have been muted a little bit. And, for somebody like myself that has a couple dozen multifamily investments, it's nice to blend in some other asset classes. I was mentioned to you before, we just closed on a car wash here this morning before we recorded the show. Car wash business is a lot different than multifamily. It can provide higher returns. It's also a lot more variables. We really like self-storage, which has a lot of the same demographics and trends as multifamily, performs exceptionally well in downturns, in recessions. Yep. Mobile home parks, which I'm a big fan of in comparison to like workforce multifamily housing, workforce, quote unquote, affordable housing. The cap rates have compressed so much, like the amount that people are willing to pay has increased so much for those properties. Yeah. And I think that mobile home parks are a really nice fit kind of alongside high quality multifamily properties. And then I think you can find some really cool opportunities in the hotel space as well. So, there's, now that COVID has ended, that travel's resumed, that PPP is finished, there's some operators that are like, hey, I got my COVID money, and I'm ready to get out from under this, business and take a breath. So there's some opportunities there as well.
What has been making that transition from, an active role in single family space and then to the limited space into the general partner space? What's been, challenging along the way? What's been surprising along the way? What did you have to really learn or overcome to be able to achieve the level of success that you guys have done so today?
Yeah. So I think there's a couple things. So first off, when we think about time as humans, we think linearly. Yes. We're like, time, we think that things are going to kind of scale like, it's going to be 1, then 2, then 4, then, and then 6. It's like, no, what happens is it's 1, 2, 4, 16, 30, it doubles, it triples, it quadruples, right? It's crazy. So it takes a lot more work on the front end, especially when you're dealing with buying a multi-million-dollar, $10, $20, $50 million property. It takes sometimes years to get your team built up. And that means your team of investors, your infrastructure on the back end. Neil, you and I, we could have the conversation. We could say, hey, there's a great single family deal down the road. And we could probably pull the cash together and buy it by the end of the week. We could, boom. If you're buying a $100 million property, you're probably not even going to get a meeting with the seller if you don't have a track record. Right. So it takes a long time. So if anybody's thinking like, hey, I'm going to scale my business, just remember what you think you can do in a year, you're probably overestimating it. What you think you can do in 5 years, you're probably underestimating it. So again, I've learned that you have to think, in that kind of exponential or curvilinear fashion instead of linear fashion. And forgive my inner engineer here speaking kind of like, curvilinear. That's kind of a funny word. But then the other piece, Neil, is that it's all about people. Yeah. It's all about people. Operations when it comes to scaling is a huge piece of it. And you have to have the right people in the right place doing the right job. And that is the most important thing, especially for somebody that, can look at a spreadsheet and analyze things and is numbers oriented. You have to realize that people are the most important if you want to scale. Yeah, there's no doubt about that. Speaking of people, talk to me just at a high level. What does a team look like structure wise to operate the level in which you operate? Yeah. So, you really have kind of 3 main pieces to the business. So we'll kind of go in order. So, all right. So we want to find a property that is a good fit for our group and is appealing to investors, right? So you need an acquisitions team. So you need a team that has relationships with brokers, with sellers, with developers so we have a pipeline for properties to buy. That's number one. You have to have those relationships. And that's why I said it takes time to build those up, right?
Sure.
Number two, you have to be, so again, still in that first, in the acquisitions piece. Number two piece of that is being able to evaluate those deals. So you need a team that can actively find the deals, that can evaluate them, that can vet them and look through them. We underwrote about 500 multifamily properties last year.
Wow.
For, and we acquired less than 10. So we're talking about I think it was 1.6% was our actual acquisition versus underwriting rate.
Yeah.
So, that's, got to kiss a lot of frogs. So if somebody's out there, looking at Zillow or, LoopNet, and you're like, oh my gosh, I can't find a good deal. I've looked at like 10 deals this week. Well, look at 100 more. And then, maybe, that's kind of, you have to think in terms of,
correct,
multiples. Yeah. And that's accurate, whether you're talking about residential or commercial, you just got to look at deals.
Right.
Number two, you need an operations team, right? So you need a team that can operate that deal. That means property management. That means asset managers. So we have property managers at each property, and that means you have people that are there on the ground. You have regional managers and that. Then we have an elite asset manager who oversees all of those. Now, what does he do? He oversees our projects, our overall strategy. So that means at one property, we may have to put a lot of money into exteriors because nothing's been done for 5 years. And, the grounds are kind of barren, and, the interiors need to be updated because the properties around them are newer and they're commanding higher rent. So we need to invest and do that. At another property, that might mean we're buying from a developer who doesn't really run the property that well. And they shoved a bunch of underqualified residents into that property. And in that project, he has to make sure that we're removing, any tenants that have, they've falsified, their applications and doing that thing. So, that's what that person does. But you have property level, you have regional, you have somebody overseeing that. And that also includes kind of a financial asset management piece as well. So you have the financial piece, somebody that's looking at those numbers. Sure. And that person in a syndication, they are watching out for your dollars as an investor. Yep. And that's a good segue into the last piece, which is basically investor relations, right? So you have the capital piece. And the capital piece, yes, you need to get lending, you need to get financing from a bank. You have to have those relationships, but people are willing to lend on these properties. Yep. Banks are willing to lend on these properties. But us as general partners, we may have enough money to go buy one multifamily deal or one self-storage deal if it's a big property, but we can't go buy multiple properties unless we have a team of investors. And then you need somebody that is working with those investors, right? So you need somebody that's talking to investors, that's educating them. I had a couple calls with new investors today. They're new to this space. And then investors might have questions about things that are going well or things that aren't going well in these properties, and you have to have a team that can handle that. And most importantly, if you're an investor, you want to make sure you get your money coming in. So if you have to have somebody that's handling all those distributions, all those payments on the front end as well as the back end. So again, you need three big components of the team with individuals in each of those. You need acquisitions, you need operations, and you need capital, kind of investor relations as well.
Tommy, it sounds like you're managing on the operations side in-house property management then.
So we actually use typically third-party management. Oh, good.
Yeah. And then you stack your people on top of that team.
That's right. We do. And then that way, if we have issues, we can bid out competitively. We can also swap them out. Now, I will say that there's a hybrid approach. So in the car wash space that we kind of touched on briefly, it's not like the multifamily space.
Right. There's not a ton of on kind of like off the shelf, if you will, as property management companies that are out there. We had to build our own management company, but that doesn't mean you can't keep people on board that are working at a location if you bring it on. Yeah. As you look down the next 1, 3, 5 years, what's it look like for you guys? Where are you headed?
Yeah. So I think, we have to be cognizant of where we are in the real estate cycle. I think I feel like we're in a hangover from 2021. Yeah. I think a lot of people are predicting recession. I think as far as the real estate market is concerned, I think we still have a few really good years in front of us based upon the demographics. I think that, you do have to start being cognizant that 3-5 years down the road, at some point here in this next period, we are going to probably have a recession. Sure. So we're making sure that we have, appropriate amounts of debt on our properties. We have lower leverage. We have high reserves. And we're also looking for these asset classes that we've been talking about, Neil. They're going to have some higher returns, like the car wash space. We're helping to blend in some higher cash flows for our investors, just in case we have muted returns from some of these other asset classes.
Yeah. Are there any other asset classes you're looking at stacking on other than what you're in right now?
Well, I do, and I don't try to convince people of this per se, but I think that cryptocurrency, Bitcoin in particular, is interesting. If we look at the fact that we probably have central digital currencies coming down the road, central digital currencies are kind of the ability for an end user to be tracked and also, pay conveniently versus using like a credit card.
Right.
It's basically the same thing. But how are you going to move money between digital currencies and do that? I think Bitcoin has the ability to do that. And I think Bitcoin is an interesting hedge against inflation in a lot of ways. So that is certainly something that I'm personally invested in. It's definitely something I think that a lot of investors that are looking for inflation hedges, which real estate certainly is, also are interested in as well.
Yep. No, that's great. Let's do this. I want to move on to the final segment, what I call for impact. Your favorite quote, never get in, never give in, never give in, never, never, never. In nothing, great or small, large or petty, never give in except to convictions of honor and good sense. Never yield to force, never yield to apparently overwhelming might of the enemy. Winston Churchill said it. What about that resonates most with you?
Yeah. So I think one of the important, I was asked in an interview, like what's like the most important trait? I said persistence, because and I talked about Malcolm Gladwell, right? There's another great book, Grit by Michelle Duckworth. And one of the things that Michelle Duckworth talks about is like your show's Real Grit, right? So grit is the ability to persist. And the number one thing that she talks about in that book that determines success, it's not talent. It is the mental focus on a long-term goal. So when they asked teenagers, I think it was teenagers, hey, what do you want to do when you grow up? Like if they said, hey, I want to be a professional musician or professional athlete, it was those individuals that went on to be most successful because they had a long-term goal. So along the way, if you get knocked down, have your goal. If you get knocked down, you have got to have a huge why. You've got to get up. You cannot relent. If somebody is in your ear saying, you can't do that, that's not possible, find somebody else. Surround yourself with people that have an abundance mentality that can potentially help get you up. I'm not saying you have to get up on your own, and stand true to your values. And if somebody pushes back against that, then maybe they're not the right person. Maybe they're not the right partner. But there's so many things about that quote that I love. And I just had I've kind of like a little short version. It says, never, never, never quit as a paperweight.
Yeah. What do you think holds most investors back from hitting their personal next level?
They think too small. Yeah. So we talked about linear versus, that exponential level thinking. Yeah. And, we think, and I'm guilty of it as well, Neil, it's like, I want to do this. And then you get there and you're like, oh shoot, like now what, and here's the thing. We focus on things like money. Okay. We're like, I want $10,000 a month coming in. You need to focus on a purpose.
Yes.
What is your purpose? If you have a big purpose, you are going to figure out a way to get there and to make it happen. You have to have a why, you have to have a purpose. And that will help you eliminate all those other things. It will help you focus and get clear on what you want. And it will help you persist in the face of all those other things that are coming in, no matter what.
Money means nothing. Money is just a pile of something sitting there. There's nothing to it. It's the purpose, right? Once you have a purpose, then money may be an avenue to obtain said purpose, but you got to have a purpose. Yeah. That's right.
These days, like I went to the gas station on the way home. I waved my credit card. I mean, like what is money these days? It's just, I feel like it's money is energy, right?
Yeah.
And
correct.
You can change your energy. You can create energy, and all these things resonate as well as money.
Outside of real estate, what are you most passionate about?
Health. So if you're one of my coaching clients, we talk about four main things, and people will be like, all right, we're going to talk about our finances. First thing is health. Number two is wealth. Okay. And, if you have wealth, health, like Dan Sullivan says of Strategic Coach, if you can write a check for it, it's not a problem. So the more money you have, the more health you can create a lot of ways because you have access to certain things.
Sure.
So I wear I wear things like a Whoop strap and an Oura ring. I have a cold plunge and a sauna. I love being active with my boys. And the reason I say that is because, you can't buy time. My father died when I was 5 years old. Yeah. And I want to have as much time on this planet so I can make as big of an impact, not only on my family's life, but also on the world.
Yeah. Speaking of impact, last question is, what's your favorite way to make an impact in the community?
Yeah. So I was just on another podcast yesterday talking to a younger audience. And they had me on because they didn't have people on to talk about finances. Mm-hmm. And I think that, we're talking about giving people that went to college and have student debt $10,000 to get rid of their student debt. Mm-hmm. It's like, how about we provide them with some financial literacy so they don't get into this situation in the first place, mm-hmm. and they don't tell their kids the same advice that got them into that situation. Right. And I was talking to an investor today about cost of capital. If you have money sitting in the bank and you don't understand the cost of capital of return on investment, you don't understand if you should take that money and you should invest in a piece of real estate, invest it in an education, or pay down a credit card or, your mortgage or that sort of thing. Right. If you don't have financial literacy, you're incapable of figuring these things out, which means you can fall prey to poor advice or you rely on other people to do that. And I think whether we're talking about, a single mother like my mom was, or you're talking about, somebody that is, well off, that's a surgeon, that's coming out of college, these things can help individuals across the spectrum. So we start a financial literacy program here locally in Asheville. I try to be on a lot of other podcasts and, do those sorts of things. So I'm doing a lot of content for kind of younger audiences. We have a thing on the website, even it's nextlevelincome.com/kids. Mm-hmm. And we have 5 steps to help your kids become money pros. Feel free to download that. And hopefully it makes an impact if you're listening today and use it. No,
that's terrific. Chris, I appreciate you taking the time to connect on here. This has been wonderfully impactful. I mean, you're a world of tremendous resource, and then just the sheer breadth of your experiences and how you apply that, not just to your day-to-day work life, but now what you're doing for your children and the next generation and that of others' generations, the impact you're making outside of your own family. It's terrific. For people who want to find you, they want to follow you, they want to connect with you, where should they go? What should they do?
Yeah, we try to make it easy. Nextlevelincome.com. As I mentioned, you get a copy of our book there. You can check out our podcast there, our blog. Almost everything we talked about today, Neil, you can find there. If you are interested in learning about our investments and you want to see if it's a good fit, you can click on the invest link and set up a call with me. I'd be happy to discuss that with you. But love what you do. Love the grit. Love the Real Grit name, obviously. As we talked about, Neil, and I love what you're doing for your audience.
No, I appreciate that. Thanks so much for that time, Chris. I appreciate it.
My pleasure. Thank you.
For everybody here at Real Grit, I'm Neil Timmons, reminding you that real estate requires real grit. See you guys next time. What if I told you can make 20 times the return of a single family fix and flip on your next big deal? Well, it's actually possible. It's possible inside the world of commercial real estate. Say, I'm inviting you to this free challenge. It starts August 15th. It's totally free. It's a 5-day challenge where I'm going to take you and deep dive into the world of commercial real estate, more specifically, capital multiplier properties, what that is, how we identify them. I'm going to show you how to identify them, how to evaluate them, and how to lock them up risk-free. I'm going to give you all the paperwork to do it. It's totally free. You can sign up to join us at www.20xprofitchallenge.com/real grit. That's www.20xprofitchallenge.com/real grit. And I'll see you in the challenge. If you like our content and want more, you can access it at realgritpodcast.com. You hear it guest after guest. Instinctively, you already know it. But let me call it out. The most expensive action is inaction. The real estate market is full of opportunities. You just need to uncover them. You can build a business that lasts for years, makes monumental impact in the lives of those that you love. It's not just about business, but about the freedom you get because of it. Have you ever heard the saying, if you want to go fast, go alone. If you want to go far, go together. I believe that partnering is essential. In fact, I partner with hardworking investors all the time. The point is that you can get a lot further with the right partner. Let me say it again, the right partner. If you've ever thought about partnering with anyone, or if you have a partner now, I encourage you to download my free Partner and Profit Guide, which includes the top 5 must-answer questions to evaluate